So I think Tomasz from Heart, yep, Cam from Temenos, Paweł from BNP Paribas, yes. Olena from SME Banking Club, and Tomasz from Benefactor Consulting. What a great memory I've got. Okay, I will sit here now. Tomasz identified culture as an important element in the transformation and innovation process. The first question is, do you agree with that? Cam, can I start with you before we go to the other Tomasz, please?
I think it's a resounding yes. And I'll qualify the yes with it depends on your definition of culture and innovation. It can be as narrow as the words we see on a poster saying this is what we believe in, but it can be as broad as the organizational design and the attitudes and behaviors of the CEO. So absolutely yes. And we're seeing more and more of that.
Great. So, and of course, for most of you will know when we talk about culture, quite often the definition that we hear is the way we do things around here. But actually, that sounds very, very trite, but actually there's some depth of meaning behind that. Thank you, Cam. Tomasz, from yourself.
Well, I've spent about 20 years working with corporates trying to innovate them, and I must say I lost hope. I mean, I believe we think of changing or transforming corporations as if we were more or less boiling the ocean. And when I did that, and I did projects from Saudi Aramco to 3M in Minneapolis, and I saw similar challenges across the world and across industries. And actually, I saw that if you are innovating within your business model, within your existing business idea, processes, and just making things better, it's obviously extremely important to have people engaged and innovating, improving stuff. And you can do that with proper leadership incentives and so on. Now, if you're saying that you want to build new SMEs, because we're at SME, so new business models that you need to go from new to big, from 0 to 1, you need a different process and a different culture for that, because it's not exploiting an existing model, it's exploring new models and it's searching for something new. And it's very hard to expect that the core business, the cash cow people that were recruited and trained to do perfectly your current business model and are optimizing that they will be the innovators, they will be doing the breakthroughs. So why we created the Heart was actually because of that, because you need to connect somehow with external forces, with entrepreneurial spirit, with people that are outside. And actually now we are hiring some of those people from the corporates that can have the freedom to innovate new business models, new disruptors, new suppliers, new value-added services. And for them, it's no-brainer because the culture exists in the new venture they're creating from scratch. It's very hard to bring that culture into the corporation and do two things at the same time. You need a certain level of independence for those new teams.
Right. Crucial then that the culture within a corporate, by definition, doesn't lend itself to innovative behavior. It does,
but only to incremental.
Right. Okay, good. So picking up on that, Olena, if I can come to you, you deal with SME banks a lot, a great deal. Do you see any evidence that the culture within the SME banking element of banks is moving towards this capability for innovation?
Well, yes, I actually agree that the culture and the mindset, actually, so the way you behave and the way you think, of course, creates the reality around you. So, of course, this is crucial. But actually, if to see to the banks in the CEE region, what I'm responsible for, I see actually that this is a mix of culture in the organization and still access to some technology, I mean to some technology to implement. Because if we watch, if we see on the, like one of the snapshots or indicators of if the company or the bank is innovative or open for the cooperation, I mean one of the ways to implement innovation is to cooperate with startups and fintechs that we were discussing also yesterday. So, and if you look at the banks here in the region, the CEE region, so really here in Poland, the banks are more open for such cooperation and implementing innovations than in other countries in the region. Because if we open the website of each bank here. So either this will be a part of the strategy of the bank, or a digital strategy is a separate document that is published on the website, so that everybody can actually see what are the targets, what are their strategy actually, and also third-party providers and fintechs and startups can also see this information. So I hope, so we see some trends, and I hope so that in other countries we will see such openness in the nearest year more and more. So this next 2-3 years will change everything. But if to also say a bit about the access to the innovation. So actually Raiffeisen International did a very good research on the fintechs that are operating in the CE region. The statistic is that we have less than 1,000 fintechs here in the CE region, and 19% are devoted to SME. So of course, the main pool of the fintechs are created in the payments area, in the retail banking area, services, but still the number of fintechs having solutions for SMEs is still small. I mean, I think that this is also a good room for appearing such companies, but also banks, I think, strong enough to create this market.
Right.
And also the accelerator that we were yesterday in our bank, and also elevator lab that RBI also launched in the whole CE region. There's a good events to start to create this market and really.
Right. Now, that's really, really important. So there's a technology element, inevitably, particularly in banks, of course, in terms of changing the culture. Paweł, you're in a bank. Can you just tell us a little bit about, first of all, whether you see that culture emerging in your own bank, and perhaps a bit about the technology influence on that?
Okay, so I believe there are two main obstacles, and both of them were mentioned. So at first the culture, then the technology. But I don't mean the technology itself. I mean understanding of technology. Maybe I'll start with the second one, because not the culture. Some time ago, we read an interesting research by Accenture, I believe. It was a research about the main obstacles for global banks going through digital transformation. And Accenture identified that one of the biggest challenges was the lack of professional background or education amongst the top management. Only 4% of the CEOs, and I believe 6% of the members of board of directors of board of management, as we say it here, had any practical background in technology or education in it. Okay, so of course, I'm not saying that only informatician engineers should be CEOs or top management, even opposite, but because, okay, innovation is not technology, but technology is a crucial neighbor for it. Yep. So the whole top management must understand how technology influences the business. If they do not know it, I believe there are only two ways, and both of them are wrong. One, we don't need technology. We don't need it. I don't understand it, I don't need it, we'll do it in the old way. That's the wrong direction. And the other one is, okay, technology. What's the best technology today? Oh, it's blockchain. So let's do something with blockchain. It's a holy grail of banking. It will help us with everything. Yeah? So you have to find the right balance, and you have to understand how technology influences your business. Okay. The other very important topic, I believe, is what Tomasz said before during his presentation, is uncertainty. Because when you look at the banks and the culture of the banks, you cannot change the culture in 1, 2, 3, or 5 years. It's very deeply embedded in the DNA of one company. And when you look at the bank, the bank or insurance, for the number of decades, the main area of the expertise was risk management. I don't know, credit, non-compliance, fraud, operational, name it. So banks are great in managing risks. They can identify it, they can measure it, they can try to mitigate it. If they cannot, they will prepare a contingency plan or book a financial reserve for it. They're great at it. But innovation is not about risk. Yep. It's about uncertainty. And you cannot manage uncertainty the way that you manage risk. And this is a very huge challenge for banks or insurance companies.
Absolutely right. And the psychology of managing risk versus managing uncertainty is
completely different. They try to tackle it the same way as they try to tackle risk, yeah?
Absolutely. Before I come to Tomasz for this, Cam, just wanted one more comment from you, if I could, because you work with Temenos, and your role is actually to create technology for banks. And of course, the implication of that on the culture of the bank is enormous. Do you see that shift in mindset in your banking clients?
We're seeing a broad range. So we still have the experiences where a bank will come to us and say, we want to buy this box, and we don't want any engagement with what we're going to do with it, just sell it to us and we're done. And then they'll go off and buy the technology and they don't know what to do with it, and then it doesn't do what they wanted to do, and then they come back to us and say, your technology is rubbish.
Yeah.
And so more and more we're trying to avoid that with our clients, and we're saying, look, don't buy our technology until you know what you want to do with it. So let us help you. Let's help you with the due diligence to understand why you're even here, what your purpose is, what are your KPIs, and we have that at a C-level conversation. Until the C-suite is not in a room, we won't sell them tech.
Right.
Because it makes everyone look bad. It's a lose-lose.
Yep.
And probably one of the most interesting insights, and I think fundamentally to your point, which is a really good one, is as an organization, not a bank, as an organization, why are you actually here? And that's a fundamental shift we're seeing, at least in Western Europe and globally, is that there's a big shift in the definition of bank versus banking. And if your reason for existence is to be a bank, then you will behave like a bank, and your purpose is to make money and operationally run like a bank, which means you'll buy the tech to be efficient and low cost. If your purpose is to provide banking services to your community, be that retail, wealth, SME, corporate, commercial, it doesn't matter, to serve your users, that's a completely different mindset, to your point about mindset. So when we start out just selling technology, we don't sell any technology until we understand why they're actually there, what their KPIs are, what success looks like, and how that translates into their offering to the market, and then how can the technology enable it? Technology is only the enabler. It's not the reason for existence.
Absolutely right. Technology is a tool rather than an end or a destination. Tomasz, most of that supports exactly what you were saying.
I need to add few things, and I would like to point out few points, because we are talking about culture, technology, but what we try to do and what I observed, because I worked for a corporate business for one of the biggest Polish bank for the last 8 years, that we focus on technology. But we need to do step back and start with the vision of organization, because without vision, it's very hard to assess how this technology can improve our business. What is the main reason to use this technology? Technology today is some trend. We need to have, we want to have, but if we start asking what are the real reasons to use this technology, even yesterday we talked about open banking, and it was question about the real good example of open banking platform, and I didn't hear about this case. So we are focused on technology, but firstly, we need to create the vision of the organization. We need to ask ourselves which additional value for the customers we would like to ensure because of technology, where we would like to be in 3, 4, 5 years, and after that start thinking about technology. And if we are talking about culture, it's about changing of mindset. Firstly, at the top managers. If we discuss about VUCA word, where is the problem? With tests and experiments, for example, we are used to avoid any mistakes, and we are used to take one decision and being consequent many years. But today we need to change. Every decision should be constantly monitoring and adjustment to the actual situation, but with this common general goal, what we would like to deliver to our customers.
Right. Now, this is really, really important, I think, because what we're looking at here is if we go even beyond the word vision towards purpose, that your point, Cam, what's the purpose of a bank? is it just to be a bank or whatever? And I was thinking about technology and its impact on the individual. We all have one of these, okay? Every one of us has one of these. This is a tool, not a reason for me to live. And I have adopted this tool and changed my way of life in order to use this tool effectively. So I can communicate with people at long distances, I can see them on my phone, all that sort of stuff. That's easy for me as an individual. The importance of this for a bank is that actually it's got more than one individual in it. I don't have to think about my culture, I just think about my personality. In a bank, there are thousands, tens of thousands of people whose personalities need to change in order to pick up on the technology to allow culture to change. The interesting thing about that for me is culture is internal to the bank. What about things which are external to the bank, which can impact upon the capacity for innovation? And I'm going to ask the panel this. What external barriers to innovation do you see emerging for banks? And Tomasz, can I come to you first, if I may?
Well, I think first is the shareholders and the mindset that you have more from your ownership. If you look what Google did with Alphabet, they restructured so that their investment in innovation and new business models like Waymo isn't actually stifled by the pressure to deliver quarterly results, and Google reports independently from Waymo on all the other portfolio businesses. So I think that's a short-termism kills a lot of innovation efforts. You don't invest for the long term. It's hard to be the entrepreneur. If you're Jeff Bezos, you can do that. But in many corporations where we have the pressure to innovate for 3 months, more or less, portfolio, and it's easy to get the risk out of the organization and obviously innovation with it if you were actually only investing for the short term. So that's one stakeholder group. Second is obviously the external talent that you don't get because it doesn't want to work with you. The entrepreneurs, your incentive systems usually where you don't, it's impossible to have control and to have shares, which is what motivates entrepreneurs. It's impossible to have that in a bank or in a big corporation usually, which means that people that are really skilled at building something from scratch will never come to you. You have your existing employees and you can do anything. You can set up accelerator, buy beanbags, whatever. But unless you really create a structure and a system for the entrepreneurs to co-work with you, either working as independent partners or suppliers or vendors or joint venture builders with you, it's really hard to bring them inside. Third is customers. Usually you serve your customers you know, and you don't understand the new digital players or new digital customers. That's why insurance companies still believe agents are the only way to sell because they just care about their distribution channel not to be upset, which is, for example, why we're currently building a secret startup for one of those companies here, because their internal culture was killing all those ideas for many years. They just couldn't get their ecosystem, their current value chain to agree for them to do the innovation their customers, the new generation of customers requires to be purely digital experience on your phone. Yeah. So that's another group. And fourth group I would mention is your value chain partners that could be your value added service providers. In most companies, I guess, we are used to think that we're the best. We can do everything and we are big and so on and so on. And we have the Nokia mindset rather than an App Store mindset. So if we have a customer relationship, we know our customers, we have the data about them, we are mostly focusing on providing our products and services to them rather than solving their problems in the best way with partner offerings that are complementary, which is what Apple and Google are doing with their app stores. And I guess that's the direction where you see banking changing as well, where the whole experience will be built around orchestrating an ecosystem rather than being the only developing partner, the only innovator.
Right, so the outcome is the bank has a platform to provide the infrastructure to success. Interesting, all four of those people you mentioned, the stakeholders, potential staff, customers, the partners, the thing which connects them all is expectations. their expectations of how the bank will behave and the way that in which it will transform itself in order to suit their agenda as well as the bank's own agenda. And it's interesting you mentioned Jeff Bezos, because right from the start, 1994, when he started Amazon, he was very, very clear. He wouldn't be paying out loads and loads of dividends. He wouldn't be making loads and loads of money. He'd be building capital within the business. And because he was able to make that clear from the start, expectations in the market stuck with that.
Plus, he said he will not be investing the least possible. He will be investing the most he can afford to build long-term advantage.
Exactly right. And of course, banks are in a position where their expectations were set many years ago. Okay, interesting. Olena, what external barriers do you hear about from the SME banks that you talk to?
Yes, well, I think there are two main of them. First is the economic growth and number of SMEs on the market, and second is, of course, governmental regulations. If we come to the number of SMEs, so this is the potential market for the banks to innovate for, let's say. So if you come to the CEE region, of course, the biggest number of SME customers, and I think this is one of the reasons that explains why Polish banks are more innovative in comparison to other countries at the moment, is that here in Poland there is the biggest number in the region of SME, so 2 million active SME customers. The next country in the region, if you go to numbers, is Czech Republic, so they have around 1 million active SMEs, and the rest countries are going like 3-4 times less. So countries like Romania, Hungary, the numbers are like 300,000 SMEs. So first of all, this is the market the banks can innovate for. And second is the regulations. And here actually maybe to give like 2 examples of how government or country can motivate banks to innovate or digitalize some process for SMEs. So actually, yesterday got a very interesting example from Hungary, where National Bank is actually pushing banks to digitalize. So the first project they were launching is real-time payments, which is going on. And second, what I got to know actually yesterday, that now banks are obliged to have online lending processes for SMEs. So this is becoming not a nice to have. So this is not a business case. Do we do this? I mean, does it worth it or not? But you just have to have it. So this is the first example. And second, very interesting example, like a bit like from the other side, not to push baby, but more motivate, is that the example in Estonia, we actually discussed it 2 years ago during our Krakow conference, that the project that they launched, I think 5 years ago, this e-citizenship. And if you become a citizenship of Estonia online, you can register your company online from any city in the world, and then you can operate fully online your company, and you can open online your business account and do it absolutely distant, so you don't need to come to Estonia to do this. And this is the other example how actually government can motivate to create small businesses. Of course, this is also the process of how easy it is to open a company and to operate a company. So these are the main.
Right, excellent. So the regulatory framework and actually the size of the marketplace may be barriers as well as supporters for innovation in banks. Can I ask a question?
If I can just comment on that, because that's actually in our mindset only. The fact that our local market is too small doesn't, I mean, Revolut or other big players don't care. They just go to the big international markets. And I guess we are, in some industries, we are focused on our way of thinking, that geographic boundaries and regulation in our country is our market, and we can only innovate for that market. I once heard from one of my first mentors that if you want to be innovative, you need to work for the most demanding clients in the world, and you need to know where they are. And obviously, you don't have to go globally; it doesn't make sense in all cases. But you need to know or recognize that the limitations of where your market market are only in your head.
Absolutely right. This is mindset. I think there's a Banksy cartoon that says, if you want to achieve greatness, stop asking for permission. You go where you need to go. Can I ask one question?
I would actually add to that. If you're not innovating, if you're not constantly in trouble, you're not innovating.
Yeah, absolutely. This is outside the comfort zone. So, yeah. I have one question to ask of both the panel and of the audience. How many of you are e-citizens of Estonia? Just me then. Right, okay. Well, it looks like I'm going to get global before you do. Okay. Now, Cam, just can I ask you then, just to expand a little bit on that external barriers to innovation within the banks?
I think there's a couple of angles to this. I think there's we were talking about this earlier, and before I joined Temenos, I've got a 20-year career of working in banking, asset management, stockbroking, and banking. So I was previously head of digital at BlackRock, and I'd move around, and my role was almost sort of like a transformational agent to get into organizations, bridge business and technology, and make the digital transformation happen. The biggest barrier we used to come across regularly was hype and noise. You start on one path, and then someone goes to a conference, and they hear about some new tech, and they're like, oh, we need to do that. And so suddenly, you're distracted, and you're onto another path and onto another path. Who here worked on WAP years ago? What a great big waste of time that was. So hype and noise coming from the market is a big challenge. And back to your point, Tomasz, if you don't have a vision or a purpose or a clear North Star, which is what are we here for, then you'll get distracted and you'll constantly wave and you'll deliver nothing. And so then what happens is you end up being on a 4-year digital transformation program, 3 years in, having delivered nothing, everyone's demotivated, nobody really wants to work on it anymore, and everyone's looking for the next startup they can go and join. And ultimately nothing happens. And that's really dispiriting to be part of. The other aspect to this, which is to your point, which is beautifully made, is why are we limited by being a bank, by the market that we're in, by the existing offering that we've got? Why is it sometimes, we have conversations and I sit in the room going, I can't believe we're actually talking about how can we make onboarding better? Is that it? Is that as far as we've come? And you look to Asia, and I love watching what Asia's doing, because Asia, in a way, had the disadvantage of not having the infrastructure of the West, and so just leapfrogged. They're just like, just forget this, let's just move on, as with Africa, as with the Middle East. In the West, a lot of the time, we feel quite proud of ourselves for being fast followers. Yeah. But there's a fundamental flaw in that. Who are you following, and do they know what they're doing? Yeah, and so that's one of the biggest challenges externally, is who are you following? And get out of that mindset, get back to the fundamental principles of running a business, which is what value are you serving to your market, and then look at the technology that delivers that, and don't be limited by what your peer group is doing, because that will keep you small. Absolutely right. The peer group is the biggest constrainer of ambition in anybody. Paweł, BNP Paribas, are you thinking outside the box and outside the bank?
Try to tackle something a bit else, because I think we talked about two most important obstacles. I mean, regulation and shareholders, investors. But I like to let's say give it a different perspective, because you told about Estonia, you've told about Asia. I'm in arbitrage. From our local Polish perspective, a huge problem is an arbitrage. Regulatory arbitrage. For example, we cannot do the things we can do in Estonia. We just can't. And we are a bank working in Poland under Polish license. So we cannot become easily, a transportation company. Still, if we want to do banking services here, we have to have a banking license, and we have to work according to regulations. And those are completely different here than in UK or Estonia, Latvia, Lithuania. So that's one point, and I believe it's a huge obstacle for innovation right now here in Poland. Maybe in the long term it will be, let's say, good for our market, because there's a bigger level of certainty, less risk, and so on. But only from the innovation perspective, it's an obstacle. And the other one is, let's say, investors or shareholders arbitrage. We as a banks are valued based on return on equity or return on investment. Hence, I don't know, fintech companies or other GAFA are based on, I don't know, expectations, dreams, and so on. And innovation costs money, a lot of money. So if we cannot get, as traditional banks, a lot of money, we cannot be innovative. And again, it's type of arbitrage.
That's really clever, actually. Thank you very much for that. Some really deep points there, and particularly that last point, which is innovation costs money. Actually, if innovation means deep, profound change in your organization, it costs a lot more money than it would for a fintech that was just starting. So that's interesting, because I came across recently a mining company. I was talking to somebody about this last night. A large mining company in Africa. And they were asked, what's your vision of yourselves? And they said, we want to be like Google. How are you going to be like Google? You're a mining company in Africa. So the idea of, okay, we know that banking is what we want to do rather than being a bank. Nevertheless, there are real constraints on what banks can do. And at the same time, I remember something my mother said to me once. She said, your imagination should not be limited by reality. So yes, there is a regulatory framework that stops us from doing everything we want. We can still imagine things that could be done outside
Sure,
there.
we cannot take it as an excuse. There are banks who do it well,
Sure.
and those who do it wrong, yeah.
Yeah, and that may be one of the things that we should do as a community, as SME banks and supporters, is to see what conversations we can have with regulators.
I would one point to what you said is that your future competitors, the ones you will be battling in 5 years or in 3 years, or maybe in a year, are not limiting themselves of being Facebook or Google. That they'll just do banking or disrupt a slice of your most profitable business, which is what startups or new challenges usually do. They don't attack your worst business units. They attack only the most profitable and share the joy with the customer, offering a better experience and better price. And you end up with a fixed cost and less profit.
And less profit, that's absolutely right. Now, but before Tomasz, I would like to go to the audience, actually, just to see if anybody has a particularly burning question that they would like to ask the panel. Because if not, I've got quite a few more, actually. So, does anybody have a question in particular that they would like to ask? Shy bankers, you see. This is not the, yeah. Okay, then we will move on. And I will ask what is actually quite a hard question. Can we turn it around
slightly?
Yeah.
I'm curious to know who in the audience is trying to innovate right now.
No, just one person.
Just one person. Two, three.
Yeah.
They're too shy.
And so,
Why is it so few people who are trying to innovate?
yeah.
And what is everybody else doing?
Yeah. See, we turn this panel around completely now. You're all on stage
We'll be
now.
asking
Okay.
questions
Yeah, we'll be at the break. We'll be asking you all the questions. So, actually, can we hang on to that until the break? Because I think that's a really, really important conversation that we can have both with you, between yourselves as an audience, but also with the members of the panel. Because that, in a sense, is why we are here. Actually, not just to find out whether or not you're innovating, but to help you to do that if you can. Now, there's a really hard question, actually, which is who in the business, in this case, who in the bank, is responsible for driving innovation? Tomasz, can I come to you first on that?
Yes, definitely board.
The board level.
The board. It's the beginning of the journey. And we recognize very often when we work with our clients that it's very easy to discuss about technology innovation at the operational level. So after that, after implementation, it's very hard to be consequent. So we have technology, we spend a lot of money, and after that, we don't recognize the real benefits. I would like to return to the external barriers, because maybe it
Not for too long,
wouldn't
because we've
be
got 10
popular. Okay, one word. I will not popular, I suppose, here, but I would say that the main barrier is lack of external competition on the market. Because even yesterday, when we discussed about PSD2, what we told? That we started innovation because of regulatory. And on one hand, we are talking that regulation are barrier, but on the other hand, we start some important process only because regulatory ordered it. But I remember, because I was inside the sector, that we started discussion about PSD2 6 years ago, and we was afraid that competition comes from outside of our sector. And as long as we are safe. It's about shareholders too. Yes, they know that we are big, huge, we are market share, and it would be very hard to change it. So as long as it won't be any strong competition from outside, Amazon, Google, something like that, it will be very hard to invest a lot of money and to transform all the organization, huge organization at the end of the day,
Now,
to the new culture.
right, now that's really, really interesting. That's something else to talk about at the break. Is there enough competition in banking? I'm sure you will have a view about that. Olena, can I come to you next around this? Who's responsible in the business for actually driving innovation?
Well, of course, management is the first, as Tomasz said, and this was actually presentation was about. But I still believe that all the society, the workers, the co-workers, employees of the bank, or representatives of any society. So this is also a dilemma: who pushes whom? Like the government regulates the banks, or the banks having if they have innovative mindset, or the other community if they have a certain mindset, and they have a critical mass to push some. Decisions, implementation, something that they can influence the government, co-workers can influence the management if really there is a mindset of to do the innovation, if product management thinking in an innovative way, out of box, etc. And if there is a real critical mass, I believe in this because I was working, I have also banking experience, and my team, we also were pushing something new, even if, I don't know, management didn't initiate this, for example. So I still believe that society can really change, because if the society have a certain mindset, then it creates the reality around you, and not the government. So I still believe that there is some sources of influence.
External influence, yeah. Thank you very much indeed. Paweł, you're in the bank. Who's responsible for it?
So maybe I'll start with my definition of innovation, especially in banking. So it's not an innovation. It's more like innovative product and services. It's like building something better. But still, in my opinion, it's like 10% about the idea and 90% of the execution.
Right.
So it's not about having the right idea, but just doing it. So to do it right, it's not enough to think or communicate in an innovative way. And that's the easiest part. That's most banks do. We are innovative. We're the market leader. We are agile. We've changed our structures and we are doing agile. And that's mainly bullshit. And the most important thing is to change the decision-making model, or let's say internal financing model, where to push money or not, or how to make the decisions. And in the end, change the operating model. So to be innovative, I mean, is to make a complex transformation of organization. So if you want to do it, it has to be led by the board of management. Of course, everyone has to be engaged, especially the middle managers, because it's always the question, who will lose most on this, and most say the middle management. But still, it has to be led by the top management, and it has to be a company-wide. You cannot be innovative on a small scale in a basement when you put a sign, innovation lab, and keep 10 people there for 1 year. It's not being innovative. It's not transformation. It has to be on a full scale led by the top management.
Thank you very much indeed. There's an interesting cartoon I saw on LinkedIn once, which is a huge organogram, a big organization chart with about 150 boxes on it. And right down in the bottom corner, there's a little red box, and a guy pointing proudly at it, he says, "That's our Agile innovation project," which is about, sums it up, I think. Cam, who's responsible in the business?
Oh gosh, I think ultimately everyone.
Right.
You know, DBS are really interesting. They say they're a 24,000 person startup, which is really interesting. But their story is really interesting because they try to innovate from the top. And so I'll split responsibility. So responsible is everyone, accountable is the top. If the CEO is not bought into this, then nothing's going to happen. And if that isn't translated, as you say, into operational KPIs, if P&L isn't associated with your innovation program, then it's just a nice marketing campaign and nothing happens. But DBS is a really interesting story because they try to innovate the way that we all try to innovate, which is top down, and the CEO says, right, we're going to innovate, we're going to be the world's most amazing digital bank. Nothing happened. They bought all the tech, they bought in all the consultancies, they spent millions trying to work out how to be innovative, and nothing happened. Why? Because they had a culture where there was fear on speaking your mind. And so whilst innovation is being trickled down from the top, we have this big vision, we're going to do it, everyone's being held accountable, nothing happened. When they realized, they then embarked on a 2-year culture change program to break down those barriers, which meant the CEO, the board, the exec team started appearing on floors, started making people feel safe. So there's a big focus on psychological safety in the organization to then propel the organization into one of the most successful organizations of our time.
Excellent. Thank you very much. Yeah, psychological safety is really, really important because we're talking about change. And even as individuals, you know, we're trying to make a change in our lives. We need to feel psychologically safe to be able to do that. So, Tomasz.
Well, I think it's the entrepreneurs, and they might be outside, they might be within your organization, they might be on your board. Sometimes your CEO is the entrepreneur, sometimes it's the someone on his team. And I think the big challenge is to really turn organizations into ecosystems where incremental ideas, they will be always growing within, and we just need to, like our babies, they grow from in a safe structure that's separate from the mother, that gets fed by the mother, but it's independent. And I think we just need to remember that and create a safe place for the totally disruptive new things, new models in our value chain to grow, and then they can grow there. And obviously they can report to a growth board or to the CEO or to someone else with enough resources and protection to give them that. And a link to the mother that provides a secret sauce, secret data, secret resources or talent, but it has to be driven by the needs of the child, not by what mothers wants to feed the child today. And I think we have a lot of bad mothers in corporations if it comes to raising new businesses and new children and new startups, SMEs, and within the corporations.
Tomasz, thank you very much indeed. Well, we're coming towards the end of this panel. Some really, really interesting points that have been made here. Oh, sir, you have a question? Yes. Yes, good. There's a microphone coming right behind you.
Thank you. Good morning, everybody. Very interesting discussion. Andrzej Zbikowski, ING Commercial Finance. By the way, we innovate. So I didn't raise my hand. I wonder if you share with me the opinion that the comparison or the example which you just said is very, very interesting one with babies and with the mother. And within the organizations like banks or like bigger organizations, we do not allow us to kill the baby if it is not profitable.
Oh, good question.
However bad that sounds.
Good, you know, so within the organizations, we do not have the freedom to say, oh, this project was not a successful one. Let's try another one. And this is a fundamental difference between startups and banking environment. Because startups work in the market, and the market kills those projects which are not profitable.
Can I just stop you there so the panel can answer your question?
Yes.
Okay.
And
thank
the
you.
banks
Yep.
not. So
right. So
what do you think about that?
Can we have a very quick? Thank you very much indeed. That's a great question. Very, very quick answer from each of the panelists. Actually, should we be allowing projects that don't work to die within the...
Of course, and the assumption shouldn't be that 100% of projects succeed. If 90% don't succeed, you're risking too little sometimes. But of course, risking doesn't mean launching it on big scale after a 2-year project. It might be spending 2 weeks on an experiment to validate the customer need, to prototype a solution, and so on. And you need a lot of experiments like that to come up out of the pipeline with a portfolio of useful products and services.
Which is the agile way to do it. Absolutely right. Thank you. Yes, Cam.
Oh, absolutely agree. And even, you know, the technology exists today, DevOps exists today to enable fast failure. And it's a term we're all really uncomfortable with. And it's back to the point of risk versus uncertainty.
Yes.
But the tech exists, so set yourself up for success and stop getting your products to a point where they're too big to fail, because failure is part of innovation.
Absolutely right. Paweł.
So again, it's connected to uncertainty, and we should kill such projects, but we should have the courage to make it the second time or the third time to make it better. Yeah. So there are techniques for it. There's lean, there's lean startup agile. So you have to prototype and be innovative. You cannot do it other way. So.
Brilliant. Thank you very much.
Yes, and actually, just to add, because yes, big companies, such banks and corporates just standardly don't have this, don't allow them a right to fail.
Yeah.
So when you accept this, that you can really fail, then you have these projects more and more, so you take some risk on it. But John, actually, I would like you to comment on that, because this is everything about the agility.
I will do that. I will, thank you very much. I will take that opportunity as soon as we hear from Tomasz.
Definitely, and what I told before, being innovative requires deep changes in all processes, especially decision-making process and evaluation process of new initiatives. We need to pay if we fail, maybe not so much, but we need to take decision. Not go into the project for many years and after that discovering the same.
Right, absolutely right. And just to answer the question, yeah, I think if we think about the entrepreneurs, the marketplace is a natural ecosystem, a natural environment. Things are born, they grow, they die in nature. And there's no reason why that should be any different in a corporate. And if you think about it, the idea within a corporate that a project can be started and never allowed to die is a bit like a public sector approach. That's not a private sector approach. We expect governments and civil servants to behave like that. We don't expect corporations to behave like that because they have a profit imperative. I want to thank our panel. Just a couple of very quick points about the session. We talked about culture and we talked about innovation. Definition of culture, as I said before, is very often the way we do things around here. What we've heard actually is that culture can be a sum total of barriers to innovation if the culture is wrong. And for a definition of innovation, I many years ago came up with a definition of innovation for businesses, which is the profitable application of new ideas. That's all it is. So if we are prepared to think that widely, then all the things that we've heard about from our panel, about culture, about technology, about people's behaviors and mindsets and everything else, all of that should have permission within a corporate to make innovation part of how that corporate behaves. And I agree, I think it starts right at the very top. Ladies and gentlemen, can I ask you to thank the panel, Tomasz from Benefactor Consulting, Olena from the SME Banking Club, Paweł from BNP Paribas, Cam from Temenos, and actually Tomasz from our hosts, The Heart. Thank you very much indeed, everybody.